Hey traders, this is Ron at Market Tamer. Happy Wednesday. Hope you guys had a great day. As always, everything in this presentation is for educational purposes only. We're going to kick off here with SPY. Basically unchanged, down just a teeny bit today. As of right now, it's down about 30 cents or so. Again, bulls have the edge here on the daily charts. If we go to the diamonds, similar situation. If we go to the Russell 2000, it was actually up a little bit, but again, not much of a change. But if we go to the Qs, they were down a little bit today, but with Netflix after hours, the stock, as you can see here on the daily chart, is up to 309. That's bringing the Qs up. If I zoom out a little bit, as of right now, which is 5:49 p.m. Eastern, that resistance up there is about 336. We're right here at 310, essentially 309. That's still about a 10% move. So if Netflix opens up right around this 309 area, frankly, I would say as long as it opens up anything north of 300, we would clear some of this ledge resistance up here. Anything above 300 tomorrow morning, that's the technical target. Mid 330s. Doesn't mean it's going to get there in a day or two or three or four, but there's not a whole lot to stop it from getting there. So it could be one of those trends where if we open up north of 300, then I would consider a 20-day EMA as an end-of-day trailing stop, sort of like for a swing trade. Now with Netflix up, IBM going the other way. IBM's down $9, about 6%. So it closed at 142. We're right around 133. So as of right now, we're down about here. Support's going to be around 130, also a nice big fat round number. If I zoom out, I'll tell you what, if 130 can't hold, you have these opposing candlesticks, almost like two different bricks, pounding against each other. When you have a big down day followed by a big up day, that's a reversal signal. Plus, there was a gap down and then a gap up. It's also a reversal pattern in candlestick terminology. But here is my guess. If we break 130, I don't know if that's actually going to hold. That's sort of in the middle of limbo. I would say the target's going to be down there, 123, 124. So keep it on IBM. A great example of why protected puts are valuable. Sometimes stocks gap up like Netflix, but then the stock is gaining dollar for dollar on that move. When stocks gap down, these protected puts can be lifesavers. IBM might be a great example of that. Another stock that I asked about here was Stitch Fix. This one was up about almost 5% today, but it almost cleared this resistance level. Didn't quite get there. If that stock can clear 22 bucks on a closing basis, the next target, there's not a whole lot of resistance until you get 32. Not saying it's going to get there, but this little bit of back and forth in $27 area is not that much of a stopping point. You get about 22. Technically, that would be the target. So another nice short video. The markets are not moving a whole lot right now. As you can see by the SPY, we're still range bound. If I zoom out, you can see it up there around 302, down here 283, 285 area. If we break out of there, we're going to have a lot of stocks moving. This is also options expiration week. We also have earnings reports out the wazoo right now coming out this week and next week. Individual stocks will have volatility. We'll continue to cover them here. Remember, learn about protected puts, understand what collar trades are. That's how you can basically lock in a position and your risk reward, wait for earnings to pass, and then you can reassess the position. Paper trading is free and it's a great way to practice and learn. I wish you guys a fantastic rest of the day, and I'll be back here with you tomorrow. Take good care.